Good evening and welcome back to our Rex Fuels channel, where we discuss issues and trends facing the oil and gas industry. If you're new to the channel, kindly like, subscribe, and share to stay up to date with the current trends. Once again, we have with us Pranav Khan, a veteran of the oil and gas sector and an expert on strategy and marketing. Welcome, sir.
Thank you, and it's a pleasure to be back again.
It's a pleasure to have you here as always.
Same here.
My first question to you today is, crude prices have been in the red for the second consecutive week, but one saw a jump of more than $3 per barrel on Friday. Do you see the crude price rally continuing in the coming weeks?
Excellent question, Gina. And the way we look at it is that the crude rally over the last 2 weeks has kind of turned. It has stalled, not declined, if one may say so. And the last Friday's uptick of about $3 was largely driven by the crude inventory data, which the IEA releases every Friday, and which is expectedly got delayed and is expected by Monday. Now, this again has to be seen in the light of the previous Friday, the last week to last, where the inventory buildup was much more than the consensus estimate. And we expect this week's data, when it gets published on Monday, to mirror the same inventory buildup trend. So yes, that is bearish for the crude prices in the coming week, but we need to step back and take a little larger picture and see over a larger time frame horizon how it has been playing out. We need to go back to the pre-COVID when the demand was at about 100 million barrels. And in the COVID in 2020, it came down to about 90 million barrels. In 2021, we are talking December 2021, it was at about 95 million barrels. Now, we are expected to be reaching the pre-COVID demand by the end of this year in 2022. While the prices in December 2021 were at about $75 to a barrel. Currently, we are at about 112, 113. Now, the Russia-Ukraine conflict is largely to be credited with all these recent jumps as we have seen. But now that the news from the conflict zone seems to be less surprising, so we believe that the worst has already been factored in. We do not foresee significant escalation in the conflict. And onto the supply side, as we have seen, the supplies situation in terms of the physical supplies are really well balanced. Even Iran, in the last month, its exports went up by almost 2 times. So we are seeing some of the sanctions being lifted on Venezuela, with some supplies being allowed from the Venezuela to Europe through ANI, obviously. So we are seeing gradual easing of the supply constraints. So going forward, I believe any significant upside potential is very, very limited, while the downside potential as the supply side keeps improving to have a much bigger factor on the prices. So we see a bearish trend.
Do you think the recession kind of conflict with the prices over here and the demand?
Yeah, that again is a very important point you mentioned, because as we have seen with the central banks tightening the monetary policy, which means increasing the rates, and the inflation which remains at an elevated level, there is a risk of recession as well. But let's not get to the recession and the stagflation. The inflation and the resulting lowering of demand growth is certainly going to play. And one more factor which one needs to take a look at is the China demand is not really looking great. So it is at a fairly modest level currently. And so we do not see any great uptake onto the China demand side in the immediate weeks ahead. So overall, yes, it reinforces our belief that the prices have a great risk onto the downside in the weeks ahead.
My next question to you is, what could we expect from the upcoming June 30th OPEC Plus meeting?
Interesting question, because we need to go back to the production cuts announced by the OPEC Plus back in the 2020, and they have been gradually easing it. So by August, OPEC is likely to withdraw all the production cuts. And at the same time, there are two data points on this meeting which we need to be very well aware about, that the OPEC Plus production has been gradually increasing. So by August, we expect OPEC to announce removal of all the production cuts, which began, as we said, way back in 2020. So, and the upcoming Biden's visit to Saudi is likely to be preceded by more announcement, which would keep the relations pretty cordial, so to say. So which means announcement of a little bit more increase in the production quotas, leading to the complete removal of the quotas by August. So we expect it to be, again, a bearish news on the prices front.
Well, thank you so much for being here today. It was a pleasure to talk to you as usual. And thank you all for watching.
Thank you. Pleasure here.
See you soon, sir. Bye.
Bye.